Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. All right, Discord guys. Terrence Faust, good morning. Phil, good morning. All right, let's start then. Give me 1 second. All right, 820. All right, thanks for waiting. Let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. Anthony, good morning. Charles, good morning. Disclosures are very important. If you're new to trading stock and options, I encourage you to visit optionscreen.com. Here's the link on your screen to understand the risks associated with trading stocks and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account. Based on my own risk tolerance level for general education information purposes only, please consult your financial advisor prior to making any trading decisions. Also, you should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's talk about trading psychology. One is, again, emotional intelligence. Let's do that. We'll do this not every day, but I encourage you to do this every day. Sometimes I do it, sometimes I don't on the webinar. Since some of you complain that I spend too much on trading psychology. But it's very important to be self-aware, right? We're always driven, traders are driven by two forces. One is the fear of missing out, right? You turn on the news, okay, spiders are heading to 420, 440 level, right? So that's one energy that pulls you. The second energy pulls you, you turn on TV, and as soon as the market pulls back, again, deep recession and, high inflation and stuff like that. So you're driven by two forces. So the idea is to be self-aware and kind of ask yourself why you're getting into this trade. If the answer is the train is leaving and you feel like you're going to be left out, that's probably not a good reason to trade, right? Or invest for that matter. So it's very important to be self-aware, go through the breathing exercises. Being active is very important, right? Running, walking, reading a book, praying. So I encourage you to do that, whatever works for you. And before market opens, kind of, go through your breathing exercises. Make sure you scan your body for any discomfort or any feeling or any energy that's going through your body, and then you kind of find one word that describes how you feel. I'm gonna say thankful. I'm gonna say thankful. Find one word that describes how you feel, and this is again something you can obviously share with me, but you can, something I would put in a journal, so you're aware when the market opens what is the underlying current that drives your decision. If you didn't get enough sleep, right? Sleep is an issue for a lot of people. For me, for example, if I know I'm tired and I didn't get enough sleep, I slept only for 4 hours. Okay, then maybe I take a break from trading, or trade a lot, decrease my size significantly, right? Because there is a risk. Welcome, FTLT. How are you? How's your phone? Sorry, my coughing. That's not good. But watching FTLT. Okay, give me 1 second. All right. Sorry about that. I was too excited that FTLT joined, so I spilled my coffee. Okay. So one is the economy of control. Process versus outcome. It's very important before the market opens. Go through your trading journal. I encourage everybody to keep a journal if you haven't done it. Try to do it for the next 3 months and see if there's a difference in your performance. I think there will be. And process versus outcome, or the economy of control, idea that you don't have control over what the Fed will say or what the CPI print will be, first 2 weeks of December, or what the reaction of it will be. But you do have control going into these events that can drive the market. How much exposure do you have to the market? How many positions do you have? Position size, what strike selection, right? And cash. Those are the most important part of your trading plan and something that we all can have control over, right? So again, cash, number one. Number two, number of positions. Number three, position size, right? Not to exceed more than 2.5% of account value per trade. And then number four, if you're trading options, stock selection. Negative visualization, the idea that you're prepared for any outcome and you kind of review the outcome. Spiders are trading at 400, right? We're testing 400. We tried it, week 1, week 2, week 3, right? For the 3 weeks, we were trying to break through the 400 level. For now, unsuccessful every time the market pulls back. So we may or may not break this level, right? You just have to watch that. Let's say you think we will break this level. Then the support is at 390. You can see week 1, week 2, we did not break 390. We tried to break through the 390 week 1, week 2, week 3. So that's your support, right? So if you're bullish, you turn on CNBC and Christmas rally is coming and everybody's excited and window dressing, right? So if you think we're going to do this, okay, that's positive visualization, right? You say, okay, at 415 I will exit. That's 15 points, 3-4%, not bad. But if it drops back below 390, right, then I would exit out the position. That's your stop loss. So you have 10 points to the downside and maybe 15 points to the upside. So that's positive visualization. Negative, imagine we're hitting, 390. Make it as vivid as possible. Maybe a switch. I would switch. This is a weekly chart. Each candlestick is 1 week. Now each candlestick is 1 hour, right? We know that the rally started after CPI print, right? I think it's November 22nd, right? We had a CPI data better than expected. Market had a strong rally. Right, market had a strong rally, so that's your support. 390 or 385, right? This is the session low after the CPI data, right? If we break through the 384, most likely we'll quickly drop to 370. So that's your support, and you close your eyes and imagine, okay, 390, how much are you down on this position? The idea is to be down less than $250, right? So if your risk is 10 points on a $10,000 account, you don't want to risk more than $250, right? This is the most important. Always the same size, right? This is average account in the United States, $10,000, $250. 10 shares, that would be 25. 10 points, that would be 25 shares, right? So if you're risking 10 points, if your stop loss is 10 points, then it's 25 shares. I mean, we can break 390 and revisit 380 and then bounce, right, depending on the news. Right? December is going to be volatile, so I would watch that level. Maybe after CPI print, we hit 385. If you're down $250, right, 10 points and 25 shares, that's $250. If you're down $250, then you're out at 390. I personally would want to wait at least till 385 to make a decision. So that means I need to downsize my trade. Maybe right now I'm buying, instead of 25 shares, I would buy, 15 shares, and then buy 10 more shares if we do reach 385. So that would be my thought process. Because when people ask me, should I stay in my position? It's a losing position. Vlad, what do you think? What's going to happen by tomorrow? Like, I have no idea what's going to happen by tomorrow, but I do know, right? Going back to the economy of control, I do know that when I'm down, that amount that I decided and I wrote it down in the journal, that's an agreement, right, with myself. It's in the journal and I follow, right? I don't break the rules. I mean, sometimes I do, but the goal is not to break the rules. Because when you break the rules, that's usually when at some point performance gets worse. Fred, good morning. Optimistic, relax. Fred, excellent overview. Thank you, Fred. Attending. Guest leaping again. Spiders looks much stronger than QQQ. Yes, spiders do look much stronger than QQQ. I've been a little bit wrong today on this, but we'll see. Okay, so that's negative visualization, right? Same thing with earnings, right? We did HPQ trade yesterday, right before the market closed. Continue to do earnings trade. Right, if you're on yellow, Tunnel actually released a feature I'm super excited about. I hope you guys are excited too. FTLT, this is something we can actually discuss. But again, you can go to earnings power chart. Let's see if HPQ now shows that it's. So we added these two buttons, right? I mean, this red and blue colors basically saying, you know, stocks is overbought, oversold, right? ADI is 168.26. We predict 168.43. It's overbought, so it's in red. And if it's in blue, then it's oversold. So if you click on blue, it basically says, see if any stocks in this portfolio have high implied volatility that warrant selling calls and call premium, right? If you want to sell call premium based on historical and implied volatility, does it make sense right now? And I'm taking into consideration all the earnings moves. So yesterday, Best Buy and HPQ were in blue, right? And right now they're not. None of the trades are in blue. And you can actually look at aggressive power trader, right? And same thing. See, based on historical volatility, if any of these stocks warrants selling put spread. And usually only if it's an event, right? If it's merger and acquisition news, CEO is squeezed by Iger is coming back. Okay, MLM does, right? MLM warrants selling premium, right? So this is where you can go and try to collect maybe 0.5% or 1% put spread on MLM, right? Because there is a high right now implied volatility. I mean, watch the volume. It's a, I don't know if MLM is. It's not the most liquid name in the world, right? Right. So it doesn't have a lot of volume. So that could be just a, you know, either a bad bid or very hard to get filled on that price. But there is a lot of premium in the options, right? So that's kind of the idea. So let's go back to the HPQ trade. So yesterday it was in blue. I saw credit puts and credit calls, right? And you can see it here. So now, again, negative visualization, I sold 28 put, right? So I did sell 28 put. Sorry, 26 put, 26 put. HPQ is up. HPQ is at 29.20, right? 29.20. So it's down 1%. So now I have to, again, so, well, it was up 3%, I think, last time we checked. Okay, so it's been volatile, right? Yeah, it's kind of fluctuating between gains and losses. Let's say it was down, right? It was down, so going there between up and down. 28.38. So then I have to review that 28.38, 26 put. I mean, it's still, you know, 10% out of the money, so I don't have to worry about it. But let's say it was 26.50. Then I would have to start thinking about how do I hedge this short put. You know, I can either close it for a loss, or I can close it for, or I can hedge it by using short stock, right? Using inverse cover call, limit my losses by getting into something that's neutral strategy. So if you sell short put, neutral strategy would be sell short stock. If you sold call, the neutral strategy would be buy stock to get into the cover call situation or inverse cover call. So let's try to get out of this trade. HPQ. Let me know if you have any questions. Okay, close Bed Bath and Best Buy. Okay, HPQ. All right, so short put is trading at 1 cent. And then short call at 1 cent. Okay, so now I'm trying to close both short calls and short put. 26 put for 1 cent and close the 32 call for 1 cent. And I close the bet buy for 1 cent. Okay, any question on HPQ trade? HPQ is now up 1. Yeah, I mean, it's trying to figure out where to go. I mean, they're laying off a lot of people, right? So it's not as good of a reaction as in Dell when we talked about Dell. Let me look at some. Give me 1 second. So Autodesk, I mean, these are the three four possible earnings trades we were talking about yesterday, right? Deere, HPQ, Nordstrom, and Autodesk. So Deere, we said there's not enough in premium inputs to justify the risk, but I did sell the calls, and it's actually getting close. So I need to manage Deere. 445. Continues to trade higher. And then talking about Autodesk. All right, any questions? All right, let's review the other positions. All right, so DR looks like it continues to go higher. Give me a second, I need to hedge my position. All right, any questions? Fred, I did buy shares against DR. I did 1, 2, 3. So for 100 shares of DR, I bought 30 shares. For one contract of short calls, I did buy 30 shares of DR because I sold 445. Right? I sold 445 calls. So I still have not a lot of room, only 1%. 1%, the stock is already up 6%, so that's not a lot of room. So slowly, I would not buy 100 shares, but I would buy either 50 or 30 with the idea that if it approaches 445, I'll probably either make money or, if it goes up by $4, then I would either make money or limit my losses. But right now, 445 call is trading at $3, right? So if it pulls back, I'm going to close the short call. If it rallies, I'll close the short call and short stock. I'm waiting for the pullback. Because, again, you have support at 430, right? That's the gap. So your risk is $10, right? So if you buy 100 shares, it could be $1,000 pullback. So that's why I do it in increments. We still have a little bit of room till the stop loss. Good morning, Raymond. Yeah, and that's what I did with Best Buy yesterday, right? So Best Buy yesterday was kind of the same trade. Best Buy had a better than expected earnings. It came close to 83 call, like 81, right? Within, maybe 2%, just like DR is within 1%. So then I bought the stock, right? I bought the stock. And then there was a pullback, right? AB, always think about ABC patterns, right? Market always trades in ABC pattern, right? So this is A, the B is coming. We just don't know from which point, how far it's gonna go. But this was actually in the middle of the day. So I bought the stock and then I just closed the call when the stock pulled back, made profit on calls, and sold the stock, made money on the stock. So in this example, because it had ABC pattern, it made money. Obviously, there could be a sharper pullback where it doesn't recover, right? It can drop to 430 and stay at 430, where the market is up. So market is up 0.5%. Now QQQ and semis are actually outperforming spiders. Right? I think semiconductors are actually breaking to new. Are they breaking? Not yet. Okay, so they're just closing the gap. Closing the gap. So spiders is actually better, but that would be the trade. Right, because the risk is right now that this is a false breakout, right? Spiders went to 401, and then just like last time, it retested the highs and then pulls back. So this is the risk right now I have on these DR shares. So that's why I did increment. Okay. All right, let's move on. Let's review the, okay, so let's look at interest rates, right? It's all about, not Deere earnings is great, but Deere is not going to continue going higher unless yield drops. So 10-year yield drop, right? It's staying in this key support level. From chart perspective, you don't have to be a super knowledgeable technical analyst. 3.5. Everybody's going for 3.5. By end of the year, or even lower. Some people think it will break. Some people do not. We'll see. It depends on CPI data and some of the macroeconomic data. So that's bullish, right? So 10-year yield continues to drop, sitting on this support, and dollar also pulled back after a small rebound, retesting 200-day moving average. This is a favorable condition for the market to continue to rally. So Spiders is at 400. Again, I would not get, the idea is wait 2 days. So today, we're trading above 400 level. We are retesting the November 15th, right? Like last week high. Day 1, day 2. If we are above 400 level today, let's say we close today, on Friday is a half a day. I wouldn't count it, but like Monday, we're also going to close above 400. Then it opens the door to retest this. This is the next level of overhead resistance, somewhere between 410 or 420, right? This is a false breakout. This is a false breakout. So we have 2 major rallies that failed at these levels. And now it's 200-day moving average, it's the downtrend. So everybody's watching this level. Most people don't think we're going to break to this. So I only heard maybe 1 out of 10 people that think that this level will be broken. 415, 416. So I would pay attention to that. What else is important? Value stocks are underperforming today. Sen is outperforming. Spiders is up. ARK is up. Bitcoin is up. Yay. And crude oil. I would watch the crude oil. Right, this whole drama was Saudi Arabia, increasing supply, decreasing supply. My opinion that I'm bearish, right? That that leak of information that they are planning to actually decrease. I think that's actually probably what's, at least based on the price action crude oil, that's the price. And just remember, there's embargo on Russia, right? Oil embargo on Russia that takes into effect December 6th, I believe, which is capping the, if anybody wants, if any of the G7 countries want, or even China and India, if they want to trade with Russia, they're going to set some kind of a price cap. Right now, I think it's $60, but it can fluctuate, but approximately $60, right, to make sure that Russia is not making any money or making little money on the oil. So that will create volatility in the market, in the energy market, and it will create volatility outside. So, next 2 weeks, 3 weeks, expect a lot more volatility in energy space, which can actually translate into the equities also. And that's why you see crude oil moving 3% every single day. Any questions? And gas, right? They're planning to shut off the gas, so gas is finally breaking out. You're right. Gas is finally breaking out. Fred, thank you. Interesting that Fed funds futures trading for terminal. Yeah, a lot of people don't think we're going to go much higher than 5.5%. We're not going to get to 7. So, and I think that's what futures tell you. Raymond, my order to sell Spiders for half of my position, not the entire. Seasonal strong period of crude oil. Thank you, Fred. Crude usually higher into year end. We'll see. Right now, this is not a normal year, right? I wouldn't consider this as your normal year. So seasonality, in equities, it actually looks like it's holding on. We'll see if crude oil is the same. So far, crude oil, obviously, from seasonality point of view, is horrible, right? We were at 120, and now we're at 78. So not a lot of correlation. Okay. All right. Let's look at Deere. All right, so it's still good. So I bought Deere. Deere now is going, so let me look at my orders. So now I can start closing deal. Give me 1 second. So perfect. So still down a little bit, but not a lot. Okay, so let's look at here. Five. So let me just close my. So I'm closing half of my position, closing the stock, closing the options. Decrease my size and exposure. Good. Give me a second, we'll go over the rest of the positions. Okay. HPQ same, GW and same, Autodesk same. Okay, let's review the rest of the positions. Let me know if you have any questions. All right, so Best Buy, I'm out. HPQ, looks like I'm out of the 26 put, still waiting for 32 call to be out of HPQ. So that's NOC, again, Russia-Ukraine war, unfortunately, very sad situation. Millions of people are being affected and suffering without water and food. And unfortunately, it probably will be a prolonged conflict. So still trading around NOC position. 300 call, QQQ. QQQ is underperforming. I do agree with that. I was hoping that it's actually going to be closer to 300 by this level. I mean, I'm not giving up my hope, but we need to break through this level. So QQQ has been underperforming. Spider is already retesting the 402 level where QQQ is not. As you can see, Apple, Amazon, there are just huge rotations, institutional rotation out of these darlings that everybody invested in the past 15 years. Now everybody is kind of shying away from them and moving into Deere, right? Moving to Deere and ExxonMobil, right? Old, boring, but high cash flow and high dividend stocks. Okay, so that's the trade. That's QQQ. I do have 275 to 80 put. That's working on my side, on my, in my favor. VIX is approaching 20 level. This is a bullish credit put spread. I'm taking advantage of the time decay. Taking advantage of the time decay. Let me see. I think I have 2 positions. Don't I have orders? I should probably close at least one of them. Oh, I don't have anything. Okay. Let's put an order to close. Okay, so I sold it for $1.78. It's trading at $1.60. Not okay. So, right, $3 risk. I want to make 60 cents. So let's put an order for $1.10. $1.10, $1.30, $1.10. And $1. Okay, HPQ got filled. So I'm out of HPQ. I'm out of spiders, right? So I did buy spiders. Question was on spiders. I still have spiders positioned. We'll go over that, but the spiders got filled too. That I bought yesterday. Let's see. What was I doing? Oh, and I need the second one. So $1.10 and $1.40. So looking for well, I have 2 positions. So the second one, I'm looking for 20% profit. Oh, I have time. Okay, so the second is $1.90. 90, sorry. Okay, so for these QQQ put spreads, I am putting in orders, putting the orders to close at 90 cents and $1.10 credit put spread. And as long as there's no sharp pullback below this, as long as spiders is trading above 385, then I think this is just I'm using theta decay, time decay every day. This spread is going to worse less and less. It's a January trade. So that's QQQ. At the same time, this is January, my view on December, January, my view into March, right? My view into March is that pullback continues. So I sold 300, 310 call spread. I did get rid of the put spread, so for now I have a credit call spread. I don't think we're going to break above 310. Probably over the weekend, again, for the next week, I'm going to buy put spread in March because I think this rally will come to an end either in December or early January. Right? As everybody, the next catalyst in the market, I don't think is going to be CPI. CPI, I think, is going to create short-term volatility. But the next catalyst would be the earnings season, right? The expectation that the next earnings season is going to be even worse than this current earnings season that just ended. Worse margin, worse, higher unemployment, and still higher costs, and et cetera, et cetera, et cetera. So. All right, so that's QQQ. SH, I did start adding, so we're at 400. I'm slowly start building up my SH position. Spiders, I did add yesterday. I think this is just stale. Let me refresh this. I still have 2. Okay. So I added 2 spiders, subtract, one, I closed, I guess, 30%, not 50%, but 30%. I closed at 401 because I bought it yesterday. And now I'm going to close these at around 410. Do I have orders to close them? Let's see. Let's look. I do not. Okay, so let's try to close half at 405. And it will probably 406. And half at 415. 406, I think we'll get to. 415, I have no idea. We'll have to wait and see. 415. So that's spiders. So next level 406, and then finally 415. And I think at 415 the rally will probably, or close to this level, will probably end. VIX is probably, VIX is staying steady, right? All right, so I think VIX is going to stay above, yeah, it's not going too far, even though we have rallies. I mean, the floor is probably around 18, 19 level. So I agree, great example. Fred. Yeah, deer was a good strategy, right? It's a good strategy. The good news is, I mean, if it opened at 445, then it would be a loss. But here it's kind of, let me see, I probably want to just close the rest of it. And again, the way I think about it, it's a game of large numbers, right? Trade small, trade often. If you have an opportunity to close deer, even if it's a small loss, then just close it, right? Because we're doing a lot, if you do deer, you're probably doing 3-4 trades a day, right? So if you do 3-4 trades, even one, you just want to limit to that less than $250 loss. As long as you're down less than 2.5% of your portfolio, or if it's larger portfolio, maybe 1%, it's just one of many trades. There's no reason to chase it. They're just, you're out and you move on to the next trade. Because, HPQ was successful, JWN was successful, Autodesk was successful. Okay, so one trade, the loss is even if the same as HPQ gain, but you still have 2 out of 4 trades successful, right? And compounding investment. Okay. So as long as you think about law of large numbers, and this is just one out of many trades, there's no reason to try to hold this position and defend it. My rule is usually first 15, by the first session, that by 9 o'clock, okay, I'm out. We'll do something else. And speaking of that, I'm going to do that. So at this point, I can close. At this point, I can close actually, and I mean, still a small loss, but it's okay. I can move on to the next trade. Okay, so I'm out of deer. Thank you. The spider is ready to move up. I mean, that's a general consensus. Spiders is ready to move up. I don't know what that means. That means, yes, there is a pattern of higher highs and higher lows. I agree. But I think first week and second week of December, you're going to have a lot of volatility, right? We're going to have these sharp pullbacks, maybe even more than we had here, right? This was 3% pullback. We might have 6-7% pullbacks. So volatility is going to pick up, right? Because the narrative is going to change. But I do agree into the year end, it's a pattern of higher highs and higher lows, right? Kind of what we had since October 13. Yeah, Fred, thank you. But again, I always think risk versus reward. In my opinion, okay, 415 is best case scenario. So that means, okay, I have 15 points to the upside, 3% to the upside, but something goes wrong, like CPI data, is worse than expected, and all of a sudden we are at 370, right? So 40 points to the downside, 50 points to the upside, 15 points to the upside. It's just a risk versus reward. Doesn't make sense to build new bullish positions, right? You can trim it, you can be market neutral. You know, spiders is up 0.5%. As long as you're up or down within 0.5%, you're okay, I think. But if spiders is up 0.5% and you're up 3% or 4%, you know, I would consider, you know, trimming some of your long position, even if you think we do get to 415, because we don't know. All right. Volatility creates opportunity. Yes, thank you. I agree. All right, let's try to finish up the rest of the Discord. Any questions? FTLT, you're awake? I don't see any comments from FTLT. Oh, installing the updates. I don't want to install updates. No comments. Okay. All right. Okay, let's get the rest of the positions. What happened to my XLP? So I still have a XLP put spread. Doesn't make sense. Oh, one. So we talked about spiders. XLF still bearish on XLF. Let's see, XLF. How's it performing compared to spiders? Same as spiders. You know, I mean, it's losing momentum, right? I think it's going to have a hard time breaking through this overhead resistance. Maybe incremental, but in March I still think it's going lower. So still have XLF put spread. We talked about spiders. XLK, I have to manage. I do have the short call, 135 call. Let's look at it. And puts, well, put got filled probably. Where's the put? All right, the put, or I'm already out of the put. So I do have XLK calls. Well, I have two actually from leftovers. Okay, so same thing, similar to Best Buy and Deere, XLK 135. So let's see where we are with XLK. 130. So we're getting close to 135 level. So again, two things I can do. I can close the short call, take a loss, and maybe roll it higher next week and higher, or I can buy a stock. To hedge. It expires, I think, next Friday. So I'm going to maybe buy small XLK shares again, maybe not 1-to-1, but maybe 1-to-half, 50. So 50 shares. So I'm going to buy 50 shares of XLK to defend my short call. Again, get into ratio spread. And then as we get close to my break-even point, which would be 135 plus 87. So my break-even point 135.87. So still within 1% out. So then I will decide what to buy. All right. So let me defend. Okay, so let's document that. So I log into my broker dealer from Tradespoon, orders, XLK. So Hedge or short 135 call spread. 50 bought 50 shares against one short 135 call. And spiders above 400, which is a major support level. So journaling is extremely important. So I would encourage you to kind of write down your thoughts and write down what I'm planning to do. Either close both if above 136. Or close the short call. Close short call if below 133. Okay. So now you have these comments. And I would encourage you in your journal to do the same thing. Very important to write these things down, not just kind of keep it in your head. And if I forget to write something like this, just remind me so you guys have access to this notes. XLK, I do have a spread. So the question is, would I do a spread? XLK is not a naked call, right? It's a spread. Actually, 2-to-1. It's a ratio spread because I'm actually going to start soon making money on 139 call that expires. Well, they'll probably not get to this. So let's see. Maybe I can close it. Since it's rally, I can actually, because it's probably not going to get to 139. Let's see. But it's a stale close. So I don't know. Oh, yeah, it's worthless. Yeah. But I do have 141, right? I do have 141 call. So I am hedged. But it's a wide spread. So it's probably not going to get to 141, right? Next Friday. It's not going to get to 141. So it is a spread. But we can make a tighter spread. My defense is that, I think it's going to continue going higher, so I bought the stock. Kind of the last time when we had this rally, right? I did the same thing. I bought the stock when we opened at 127 because I was concerned that we're going to go higher. The same thing can happen now, right? It's lagging, but it's, it can continue going higher. So that's XLK. XLK. All right, and then the last and not the least, XOP, right? Still bearish on XOP, the put spread, XOP. I know it's December, so probably will not drop, but we'll see. Crude oil is sitting on the key support, right? And it broke through this level briefly, but still rebound. So it's going through this consolidation, and I don't know. We do have, I think, major event will be December 6th, right? December 6th is, we'll know the details of the embargo, who is trading with who, is India buying Russia. So that can create volatility in the oil market, energy market, and I think the risk is to the downside. But, we're cutting close, so we'll have to wait and see. Yeah, IRA account, you should be able to sell credit, put spread, credit call spreads. Most broker-dealer allow you to sell credit call spread or credit put spread as long as they're cash secured, right? So whatever the risk is, you have to have cash to cover it. It is 9:16. We are 10-year yield is down. That's good. TLT is up. TLT is also breaking out. So TLT, you can see people are sitting on this key support over resistance, right? So, almost everybody thinks that TLT is going to go. Next year will be the year of treasuries, right? So 5-year treasuries, 2-year treasuries, this is where a lot of action is going to happen next year with the perception that inflation is peaking and going to start subsiding, and we're going to have a normal correlation where the market, treasury is going to be up and equity is going to be down. That's about it. So just retracing. We need participation from the mega cap technology. How are they doing? Yeah, and the problem is that Apple, Google, Microsoft, Amazon, they're all underperforming. And Tesla is underperforming longer term. So that's the problem. The value is also not going anywhere. So you can see value is exhausted. So it's all about technology, but we need these guys to rally. And they are kind of behind. Okay. William, thank you. It is close enough. Yes, happy Thanksgiving. This is a time of, I'm very grateful that you guys are here, that you're part of my life, that I have this opportunity to share my experience, share my knowledge. This is a blessing, and best wishes to you and your family. I will see you guys Friday, half a day, so there won't be closing bell, but we will have a strategy roundtable. So if you join me at 9:30 Central, we can talk about any positions, and Scott will do the morning bell. Happy Thanksgiving. Best wishes to you and your family. Thank you. XLK should, yeah, but it's next Friday. I moved XLK to next Friday, so it's it's going to start losing value, but next week, not this week. Thank you, Claude. Faust. Claude, thank you. Thank you, Fred. Thank you, Phil. Thank you, guys. Everybody, take care.